Hello friends, this is Martin from CK's channel for learning about investing and learning. And welcome to Markets Next Week, a brand new episode of technical analysis on the market, what happened in the market last week and how we can better plan for the next week trades is what we are going to look at. If you're not subscribed, please subscribe right away and share it to your friends so that it helps us a lot and continue doing the same thing. And this analysis for the week that is starting from October 4th, Monday 2021. So without wasting time, we're getting into it. So we would have the slide screenshots in the upcoming slides. We will be having that. So no need to worry. We just the format is that we talk about what happened and then see the charts, right? So Nifty formed a weekly bearish candle. It's almost near to a dark cloud cover. Dark cloud cover is a it's kind of a bull trap, moves above the high of the previous candle and then close more than 50% below with the color change. That means if it's an uptrend green, then it becomes red. So it's an uptrend and it's almost near to dark, but it's not, it did not move fully above the previous candle. That's all the difference. But so it's bearish 3% of fall that happened last week and recovered 0.5%, so 2.5% fall now. Bank Nifty also formed a bearish candle with nearly 4% of fall and only 1% of that could be recovered. That's what happened the entire week. Bearishness or slight correction, you can say. Now the Nifty candle is indecisive dragonfly doji. So it's like it's very small body, hardly any body is there. So it's kind of very indecisive on whether it could be. So what is it indecisive about? It's indecisive about whether it has to stay at that level or then fall down or bounce back. What is it? That's a confusion that the candlestick is showing. So yeah, dragonfly could indicate that there could be a bounce. So similarly, Bank Nifty has put a hammer. If you see the daily Friday's candle, if you see it's a hammer. Hammer is a bullish presence candle. Now you can see the wick size is more, and that also may be signaling a reversal because both of them are at a support zone. That's why. Now the Bollinger Bands, if you see that, you can see that it has moved away from the upper band. Now it has slipped away from the moving average, the medium band, middle band of the three bands that is there for the Bollinger Band. So slipping from the 20 DMA is a concern, right? That's further strengthening the bearish view. Now look at this, what we are talked about. Hardly any body. This is the left side Nifty doji candle on the daily, and this is the hammer. So both are at a support, so it could indicate a reversal. Bank Nifty weekly, if you see, Nifty weekly, if you see, it's a bearish candle, so almost like a dark cloud, not exactly fully confirmed, but yeah. Here also it's a very long wide range, bearish candle that happened, right? So let's say that. And so weekly bearishness is what exactly is seen, daily indecisiveness and chances for bounce. Bollinger Bands, you can see it has slipped away from the upper band and then moved and slipped down from the moving average, almost at the edge. You don't know whether it will be able to catch up or above this moving average band. Here also same, it slipped down but still touching the band, and that could be, if it is not able to sustain to hold on to the moving average, then it is clear bearishness. If it is catching up the next day, because both are small bodies, so then it should be fine. But yeah, volatility expansion is still there, but it is slightly you can see that the expansion is reducing. You can see that the curve is bending and then some kind of consolidation in this range may be likely. The Bank Nifty is not showing that, but still the up move is slightly bent, that's all. But Nifty shows that it's exhausted and then there is a chance of consolidation is what it shows. Now look at the support resistance and level for Nifty. You can see that 17,350 and 17,450. That's the first support zone. Then you have, if that is gone, you have 17,250, 7,300. That is gone, you have 17,000 and 7,150. On the upside, resistance is 17,600 or 7,650. 79.50 above that, and that's what it got resistance earlier, and then above that it's rounding number 18,000, and above that you have Fibonacci projection that is 18,350. You can see that the support levels of Nifty are all previous swing lows or previous resistance areas, right? So the Bank Nifty, again, if you look that, you'll be seeing all this in the upcoming slides, okay, in the charts itself. Bank Nifty, you see 36,900 and 37, so 37,000 nearby, that is what the first support is going to be. That is gone means you slip to 36,500, 36,300 that levels. That is also gone, it will go back to 36,000 nearby range, right? Between 34,600 and 35,900. Now these are all previous swing lows in the Bank Nifty. Resistance upside is 37,700 to 37,800. So that is first resistance. Above that you have resistance near 38,000 rounding number. Then after that you have 38,350 where it hit and then reverse back. now the previous all-time high. And then above that you have 38,800, which is a projection level, Fibonacci extension, right? So that's what the support and resistance level. So one thing I remember that this is a support zone, both Nifty and the Bank Nifty, if you see, right? Previous supports down there, similarly blended resistance is also on the upsides, right? So both the indices corrected 3 to 4%. So this is what you're talking about, the Nifty support zones, right? It is at a support zone 1, 2, 3, 4, 5. Last entire week is a correction of 2 to 3%, right? Support resistance is upside, rounding number, projection level 23, projection level 38, downside, and 13,000 is a 23 retracement level. Bank Nifty also, if you see, the highest point is 38,850, then 38,000 is the projection level. Then it just in 5 days of see the correction that has happened, but it is still at a support zone of 36,900, 37,000. So 37,000 is the subject. They slip down, we'll go back to the 36 ranges, right? So momentum and trend analysis is the next one. Nifty and Bank Nifty both lost a little bit of momentum and slipped to the sideways. That is the highlight of last week, right? On the daily time frame, the shorter time frame, right? Both, but weekly and monthly still intact bullish as of now. Another thing, Bank Nifty has a momentum bullish reverse divergence on the weekly, only Bank Nifty. So there is a chance that Bank Nifty can bounce, is what it indicates. If it works out, it's not confirmed, right? And on the daily time frame, this is on the weekly time frame for Bank Nifty, but on the daily time frame also there is some kind of momentum bullish reverse divergence. So there is a chance of bouncing from the momentum bullish reverse divergence point of view, as well as the support point of view, as well as the hammer is holding on to the moving average, and hammer is at a support level, or doji is at a support level, right? There is no last day is kind of a bullish up move to recover from it. That will indicate. So that is it. Now there is a bearish momentum divergence that was there that we talked about last week. That is exactly what happened. 5 days continuous correction happened, so it met its target. Now Nifty and the Bank Nifty, the ADX indicator also crossed over to bearish zones on the short term, and the strength is also falling on the daily frame. So short term it has got momentum and trend, but it is bullish and it is rising in the strength ADX, right? It is bullish in the sense that DMI is positive. It is only monthly and the weekly that is fine in Nifty and Bank Nifty, but Nifty and Bank Nifty lost the trend. The trend crossover happened from the bullish to the bearish zones on the short term daily on both indices ADX indicator, right? So momentum and trend is lost in the short term. This is what you see. Momentum has slipped sideways. Momentum has slipped sideways with back to the Bank Nifty. Here, this is the divergence that we're talking about. So this is the weekly Bank Nifty has got a price that is moving up and the momentum that is coming down. This is a potential for a bounce up from here and up. Similarly, Nifty, this is a daily candle. There is an up move on the price. Down. This is a bullish reverse momentum divergence which can push it up, right? Now trend. You saw that trend, right? The strength of the trend is dipping. Strength of the trend is dipping daily. And crossover from bullish to bearish has happened. Crossover from bullish to bearish has happened right in the Bank Nifty also. Now open interest analysis, if you see, it is long and winding on Nifty as well as Bank Nifty. Long winding is what is bearish, right? People are long, now thinking of going short, right? Now the October 7 weekly expiry is saying that the highest resistance is 18,500 and then 18,000, right? And below that the support is at 17,500 and 17,400. So 17,500, 18,000 expiry will be there if there is no crashes happening from that point, right? And the Bank Nifty, you can see that 38,000 is the highest call rating is there and 40,000 after that, right? So highest put rating is in is 37,000, 36,000. Put call ratio is not very bullish, but neither bullish, 0.71 and 721 Nifty and Bank Nifty. Now the thing is, VIX last week did what thing? It shot up 12%, reaching 19 levels for the first time after a long period, and then it dipped, gave up 9% of that and settled at 17, right? So the implied volatility is 16.2, and then it is higher than the historic implied volatility, but the IV percentage is improved to 32%, but there's further to go up to 75 for the sellers to really benefit from the option selling, right? So that is the open interest analysis and the volatility is talking about, right? This is the chart of the October 7th expiry, Nifty ATM 750, right? You can see that the levels that we talked about, right? 70,400, 500, and then 18,500 and 18,000, right? Similar to Bank Nifty, 37 and 38, right? Put and call. Now let's look at what happened in the sectors. So the two sectors corrected last week, that is the sectors were performing. IT sector corrected 7.2% last week, and now it has got a gravestone handle which is very bearish. Right? Gravestone is bearish. No. This sure. Gravestone was last week Friday. So we analyzed that to go to the gravestone, it can further be bearish. And after that, 5 days of correction happened. That is how the 7.2% correction. So dollar index is still moving up. It is an all-time high, not all-time high. It is broken out of a major resistance, and the work from home is continuing. So there is no chance that it will continue further. This is a mild, healthy correction is what I would say after that. But the momentum slipped in the sideways for the IT sector. So we'll have to wait for the momentum to catch up before we can pick stocks in that. So FMCG also corrected 3.3% last week. Analysts formed a dragonfly doji, that is indecisive. This is a point where it has to decide whether to correct how much, whether it does further correct or not. But the deficiencies that we have to see. So the market is, if it is going down, then this will not fall that much, right? So, but the momentum is not, so we'll have to wait for this. So IT and FMCG has moved to sideways. Metal short bound back, auto short bound back, pharma short bound back, realty short bound back. All other sectors are showing some sense of recovery. Metal, if you see, it moved 2.5%, showing a hammer pattern, is it? Right? The bullish divergence was noticed last week and it worked. Only thing is you have to make sure that the momentum is sustaining, right? In the coming days, we can pick up. Right? And the auto sector corrected 4%. Moved up actually 4%, gave up and then settled at 1.5%. So it's also a kind of reversal continuation. Short-term momentum support zones gained the momentum in short term, right? Weekly momentum is at the edge. So you'll have to wait for some more, there is a resistance on the index on the weekly. So that resistance on W pattern, double bottom has to be taken out before we can be sure of filtering. So wait for some more momentum is what, but reversal is clear on the metal board sector. Pharma sector also moved up 2% last week. It climbed to the bullish zones and now there's a hammer pattern which is indicating the bull process. And short and medium term momentum is good, right? So momentum is sustaining or not, we'll have to check and then you'll have to add. Right? There is resistance on nearby, very close by the farm sector, so that has to be taken out before we can. So reality is 30% move in 2 weeks, right? It again moved 1%, 1.5%, forming some small body candle because after a big 25% kind of move that happened the previous week, right? It's super bullish, and then it's already time picking up stocks. So reality is completely bullish, and pharma, auto, metal and are recovering, and IT and FMCG are correcting. Now, institutional participation, if you see, Fyers sold 6,500 crores last week. This is a concern. PAS bought 4,300 crores, which is why market did not fall, right? Net longs on the derivative also did last week. You can see that what happened. See, this is all Fyers that is selling continuously except for the last Friday when it bounced slightly. Here also it's all buying in the last day. But it's exactly opposite of what FIA did, right? Now, global markets, if you see, US markets closed red actually. Because previous week it had formed a hammer kind of pattern after a bounce from the outcome of the Fed meetings, right? So the dollar index further strengthened, broke out of the resistance zone, right? It broke out of the resistance zone, you can see the downside, and then it is having another resistance very close by, so it cannot sustain too much. This is also a resistance zone. This was a major resistance zone that is broken out. So dollar strengthened, rupee weakened. USD also showing the same thing. It is moved up green with 1%. That means rupee is weakened. Rupee is now at the 74.3 kind of levels, but there is a channel resistance that you can see. It may hit some resistance or some international something can happen. So it will not go and hit the 75 levels, right? It may hover below that is what the expectation is. Now gold, if you can see, gold charts unfortunately not there. It's not there, but it's a cup and handle breakout that is happening. Gold did a bounce back. Actually, let us see the gold. Or should we not see the gold, right? So there is a gold chart. You can see that it is a bit. It was a slip from the major support zones, and then it climbed back forming a hammer. So it was facing some resistance in the previous support zone. There is a channel top resistance also there, but the bounce back or comeback of the gold despite the dollar strengthening is fabulous, right? So it's not ready to go down, simply not ready to go down. Hammer is always another big hammer happened 6-7 weeks before and then got back. So it's also trying to get back. But remember that this is a channel resistance, and also it's a handle formation that is happening of the cup and handle on the weekly basis, right? So it's exactly, so gold is bullish, but yeah, because of dollar strengthening there is some down moments interim that happens and then it bounces back. The stock picks, some pharmaceutical is showing a cup and handle breakout, and there is some handle formation, then broke out, and then there is consolidation for several weeks, and then it is again broken out. So this is actually positioning or a swing play. For positional, this neckline where it broke out from can be the stop loss, and otherwise this upside consolidation low, candle low, or the box pattern low. This is some kind of flag breakout or consolidation box breakout that is happening, right? Along with the cup and handle, right? So it's bullish, clear. All time frame momentum also is bullish. So right side you see is United Spirits. United Spirits had a 6-year long resistance that is taken out last week, right? So clearly is a long way to go up. Right? Momentum is bullish, trend is bullish, everything is bullish, right? So United Spirits and Sunfarm. Actually, this is a Vega push to double diagonal curve spread where we are hoping that the Vega will again climb back to 19 levels from the dip of 9% that happened earlier. And the POP is good, and profit percentage is not great, but you can exit early and or increase the lot size as per your risk appetite. Now the wrap up is that the indices last week corrected 3.4%, but it has a support zone. Trend and momentum is slipped to sideways. So the bias is moderate bearish, not right. Much of the correction has not happened since long. Fyers is selling. The candlesticks are not very, not very attractive on the weekly basis. Right? And all of this leads to the negative bias. Now, the scope for a bounce is still there because there is a divergence on the Nifty weekly and the BANKNIFTY daily, and the price at a support zone. The candles on the Friday is kind of showing that it is intending to move. So, but the fact is that the Fyers is selling. Right? Long time no correction has happened. Weekly candle is clearly bearish, right? These are all things. The momentum is slipped, right? The trend is also slipped in the short term. These are all things which is by this bearish, but still there is hope. There is a possibility that a rise up can happen. The VIX shot up 12%, nearly 90 levels, and then rode at night. So that some option buyers will be running the choppiness that is happening in the market intraday as well as swing. Option sellers may be having good time because of the premium increase, but still the IVP has to increase more. Right? So there's a mistake here. Ratio spread. This is actually ratio spreads. Ratio spreads, double diagonal curve spreads. They'll take a ratio spread at the higher levels. It works well. Double diagonal, whenever there is a dip on VIX and then there is chance of again motivating upwards, that could work well. The vertical spread is always good instead of taking a naked long or short, so that this kind of price movements because of the volatility can be accommodated for, right? Positional traders has to be aware clearly on when the support zone breaking according to where they made the entry, and we'll have to take the correct the positions, get out of the positions, or if it's moving up, we have to trade the profits according to the support resistance levels mentioned here has to be very clear if we're positionally long on the futures or the index based stocks, right? So that's a wrap up. So I hope this gives you clarity on what exactly we are going through right now the last 5 days or even previous to that also, right? And how we can plan for what should be the bias, what can be the bias, how we can play this. All of this, I think you would have got a fair bit of idea on this. If it helped you, hit the like button and share it to your friends so that they can also benefit, and it means a lot to us. Thank you for watching, and happy learning, happy trading. Bye.